15-year mortgage or a 30-year mortgage? Which one's right for you? Well, last video we talked about when and why someone would get a 15-year mortgage, and in this video we're going to talk about when and why someone would get a 30-year mortgage. Now, before we get started, show some love, subscribe to our channel, give us a thumbs up, leave some comments, but without further ado, let's get started. Nathan, last time we talked, we were going over a 15-year mortgage. This time, we're specifically talking about a 30-year mortgage. So just sum it up real quick, and what's the ideal situation for someone to get a 30-year mortgage?
Oh gosh, an ideal situation for a 30-year mortgage is anybody who wants to own a home and have pretty much the least amount of cash flow requirements possible while still being able to pay off their mortgage. The reason why I say that is because there are things like interest-only loans or things like that where you can maybe get a lower payment, but you actually never pay off the mortgage. So a 30-year loan is a fantastic tool for anybody who wants to get into a reasonable cash flow situation and also wants to pay off their mortgage.
Last time we talked about when a 15-year mortgage makes sense for real estate investors. We talked a little bit about the 30-year mortgage being a better fit for them in particular. Now that we're talking about the 30-year mortgage, why does that make sense for real estate investors again?
Well, the real estate investors that we speak with, they're most concerned about keeping the cash flow requirement as low as possible. So a 30-year versus a 15-year, there can be a significant difference in the amount that's required for them to pay. So imagine that a real estate investor doesn't have somebody in their home for a couple of months. Well, do you want a high payment or do you want a low payment when somebody's not in the home? Well, obviously you want a low payment. So as an investor, you're banking on, first of all, the cash flow, the profit of the cash flow. Yeah. And second of all, you're banking on the appreciation. So there's a lot of benefit to having the 30-year mortgage in that situation.
Now, with interest rates being so low in 2020, does that affect somebody's choice for going over a 30-year mortgage versus a 15?
Well, yeah, for sure. I mean, with the rates being so low, the 15-year mortgage is more attractive for sure because you can have a lower cash flow requirement than traditionally, right? 1% from a 3 to a 4% mortgage on a 15-year mortgage makes a significant difference than on a 30-year mortgage. Yeah. That being said, it affects both of them very positively. So if there's an opportunity for you to lock in a rate where you're borrowing money at a very low rate for 30 years, that's outstanding. That's a very good use of money. And so it affects both of them similarly. And it's advantageous for consumers to be purchasing when interest rates are low, which is why we're seeing the market in the middle of a pandemic explode, at least in our area, because the buying power is so good right now. So it does affect a 15-year mortgage positively and a 30-year mortgage positively. I will say though that from an investor standpoint or maybe a first-time home buyer, the opportunity to keep your cash flow super low on a 30-year mortgage is extremely attractive.
Which is why we're seeing a lot of refinances right now.
Tons of them, because you're locking in the rate for a distinct amount of time, like for a specific term. And so you're finding some people are refinancing into a 15-year mortgage and having the same payment. Yeah. Well, that's tremendous. But if you're a first-time home buyer and you're just choosing between a 15 and a 30, the 30 is probably still going to make the most sense from a cash flow standpoint.
As we say, cash flow is king.
Always.
Now, for a 30-year mortgage, it sounds great from what we've been talking about. However, when is it not an ideal situation for someone?
Well, a mortgage in general is not a good idea for someone if they're really trying to manipulate their way into owning a home and really not being financially prepared to purchase a home is a huge red flag that a 30-year mortgage is not good for you. If you're just trying to get into a home and you're trying to get an interest only or something like that, it really creates it really could create some significant problems, or if they need an adjustable arm rate or these sorts of tricky things, that's when we would probably recommend somebody just hold off, rent for a while, save, get your financial ducks in a row so you can really prepare. So a 30-year mortgage is not a good fit for somebody who's not prepared to purchase a home.
Got it, because it'll be the lowest required cash flow possible. So if you can barely squeeze into that, maybe it's not the best situation.
It's not a good idea because, yeah, exactly. Because the last thing you want to do is miss your mortgage payment. Yeah. That's like a really, really big no-no.
Yep. And there you have it. Our opinion on a 30-year mortgage, when it makes sense for someone and when it may not make sense for someone. If you want to know more or customize your own plan to figure out what makes most sense for you, give us an email over at info@nw-premier.com and we can customize a plan specifically for you, or just give you some advice, or sit down for an hour and talk about what the ideal situation would be, again, for you. Thanks for tuning in. Until next time.